Thank you. Oh. Boom, boom. Okay. I got to monetize. Penny, I love you, but stop. YouTube Studio. I don't think it crashed. Okay, I'm live. Sweet. Content. And live. And then on. Morning, Joe. We're going to do that. And then I got to get my scans going. Boom, boom. You don't have to be quiet. It's that one that has to be quiet. That's the one that has to be quiet. Morning, Sir Ryan. Okay. Scans. I got a killer stock for you, too. What is it? PSIX, if you want to look it up. Brian from Facebook brought it up. There we go. Okay. ITB. The home builders. I don't think that's anything. No, it's not comments or anything. Okay. So we've got that. We've got this. I've got to do not disturb. I've got seeking alpha. $25 off your membership. Oh, they raised the price of the plan. They did not tell me that. What up? Okay, that's good. We've got this. We've got that. We're going to go home there. Home there. Okay, ITB is good. Brokerage, anything in Bitcoin. Okay. Let me get YouTube up live here. Oh, I got an ad. Daddy gets paid. Daddy gets paid less than a penny. Sweet. Well, I probably have to alter that light. Nothing in Bitcoin. Covered calls. I probably should change the name. QQQY. Income ETFs. QQQY. And then energy names. I don't know. Did they pick up my nothing in energy? Leveraged ETFs. SDAO and NAIL. SDAO and NAIL. Morning, Brandon. Low cost Vanguard. Wah. I'm going to be on Spaces this afternoon, 2 p.m. With Wolf. Oh, Blake, make no mistake about it, and I'll say it again. When you get to 200, it's being knocked right back down to 195, 196, between 195 and 200. Yeah, he's selling a ton, but he's not selling it until it gets over 200. So I don't care if you buy it at 195. I don't care if you buy it at 198. We don't know when he's going to be done. So I'm not saying, hey, this is a great trade. I'm saying at some point in time, he stops buying, he stops selling. And that's when shit's going to, light off. And that's my thought process. Could be totally wrong, Blake. I could be completely wrong. But he's only selling. When you go over here and you look, let's look at Amazon. And this is just a nice, easy way to look at the insider selling. When you look, it's only updated till the 8th, I guess, 2 days ago or something. What's the price? $236, $200.36. $200. He's only selling over 200. So the second it gets to over 200, he's then, not selling. It's $200.09. He's probably selling more right now. So, you're going to trade sideways here for a little while. But what does sideways typically do? It capitulates you in order to another move up. We talked about how 188 was that resistance level. That's your support. So in my mind, Blake, I'm not trading this one. I am literally looking at this as a 6 to 12 to 5 year kind of investment. I'm not putting oh my God, I've got to, get out of this one because he's selling. There's always a reason insiders sell. And in my mind, Bezos is selling for the simple reason that Bill Gates used to sell his Microsoft stock. He's trying to diversify. I mean, he's trying to pay his taxes into the U.S. He's trying to not. There could be a potential that Mr. Bezos may be interested in running for political office at some point in time. And if he does, he's got to bring that stock down, and he's got to show that he paid taxes, not just living off of that stock. So I don't think it's not like it's no news because it's going to hold the stock at that $200 price. But it's not. This is a level setting. This isn't anything other than a level setting. And it's expensive. Yes, you have to believe in the future growth of this company, but I don't think there's any, this company has never had a problem growing. And I think Andy Jassy is doing a fantastic job. So, we talk about good companies with good products. It's a great product. Good profits. Good management. Great management. Great company. Again, they're these are guys that essentially they overhired during the pandemic because they needed it, and they're becoming a better company by shrinking. And if you don't think that AI is going to bring around Amazon to actually shrink their costs, I think it's going to be crazy good. Again, that's one of the ones that I have no problem being the top 5 in my personal portfolio, and I'll continue to add to it. So I don't want to steer anyone in the wrong direction. I could be completely wrong. But in my mind, I'm putting my money at that place. So BKNG, DEC, and Snap. Nah, Blake, you're good. Hey, I talked for a freaking hour, 2.5 hours a day on this live. I talk for an hour a day on the podcast, and then I go out and talk to my girlfriend for like 4 hours. And she even told me yesterday, she doesn't know what I say half the time. She's like, I said, I'm going to go a day without talking at some point. She goes, I probably wouldn't even notice. I should record some of our conversations. Actually, no, I shouldn't. Anything in the Dow? I think I don't think he's doing it to keep the price down. I mean, I don't know if he said why he's doing it, but the guy, I mean, it's not even a lot of money. I mean, to him, this is like you guys selling, I found out, by the way, that I'm in the 1%. I didn't even know I was in the freaking 1%. But it'd be like me selling $1,000, maybe even $100 worth of stock. it's just not something that I think he even thinks out. He's just like, yeah, sell a bunch. Just sell a bunch for me. You know, let's buy a new island. He did just buy a bunch of new houses, I think, in Miami. He bought an entire block of houses so that he could essentially, you know, friends and family can stay, and they're redoing a bunch of them. And Lowe's, USB. Okay. I've got BK. No, I don't have BK. BlackRock. Okay. Let's go back to the strategy tester. And let's see. Where's the 4 hour? There it is. I mean, that weekly on Amazon is just clear as day that's going to be, this is going to be your support level right there. And if it breaks down over past 188, then we've got something to talk about. But I think this MACD crossing down, my guess is that you're probably going to get down to about the oscillator. And I think you'll trade sideways here between 196 and 200. Because that's going to be an awful lot of selling pressure at 200. And he's going to continue on. I make no mistake, he's going to monetize that mofo like I do every morning. Okay. This is the stock that I was telling you about, Power Solutions. The symbol is PSIX. Brian found it. That's part of the socials. I will post this. I didn't do the link. Yeah, I will post this in the newsletter. Then we'll go Taiwan Semi. That's earnings. Then I can't. Yeah, I'll go over that. I took a screenshot of the tech sector, tech and communication stocks, the latest quant strong buys. And Seeking Alpha has told me that I can't post screenshots like that. So I'll go over kind of what I think about them. But NVIDIA to 180. This is an interesting discussion between Steve Grasso, Karen Fireman, risk reversal. They weigh in on what they're thinking. And in fact, Steve Grasso says, I just bought a bunch more. So, I mean, listen, you know, Bill Gross, Tesla is acting like a meme stock. Tesla, it very well might be time to trim. This is interesting that could we see this type of thing again? Apple price target. Apple ticks up. What's their new price target? 260 from 220. And we'll talk about Amazon. We'll talk about Oracle. I don't know. Did anything come out in the news on Oracle and Elon? I don't know if they posted an article. Yeah, I guess. Yeah, we'll post this. Yeah, well, I think I'll post the server deal. We'll post this one. I'll post that. That's an interesting article, by the way. Oh, we're going to move this back there. Then we've got the venture one. Chip hoarding is what I called it. This is a great list of implied growth assumptions for AI. I thought this particular video was fantastic. It is a trading lab, and he uses TradingView, but he goes over the MACD strategy that that woman, Linda, There we go. We'll pause it there. And then Meta, is it bounce time? Because it has been freaking bouncing. This is just a Substack that is absolutely fantastic for you at Google. That's a great one. And then the core portfolio, it was interesting to see this morning that the core portfolio, 27 holds, 8 buys, and only 3 strong buys. So I thought that was great. Okay, let's go to the Qs. Oh, Blake, I don't do options. Flat out, don't do options. I'm too dumb to do options, Blake. I mean, honest to God, people may think I'm smart. I am. I did find out. I guess, I'm not part. Am I part of the 1%? I think I'm part of the 2%. They say people with the top 1% of net worth in the U.S. in 2025 will have $11.6 million in net worth. FYI, I do not have $11.6 million in net worth. The top 2%, I will leave it at it's lower than 11.6. I am in the above the 2%. So I'm probably like 1.8%. But I do not have $11 million worth of net worth. If I had $11 million worth of net worth, my ass would be on the golf course this morning. Brandon, I mean, not to kind of, gaslight you or anything. It was funny because I do get an alert when there's an issue with a payment. And I am so pissed at the amount of money that I pay to Stripe to process this. I mean, it is unbelievable. It's like 20% that I pay to Stripe and to Substack. So I mean, honestly, I get this alert that there was a credit card issue, and I said to my girlfriend, I said, Brandon's got a credit card issue. I said, should I message him? She's like, oh, you should message him. I said, no, I'm not going to message him. He'll figure it out. It was funny. Okay. I'm going to hit record. Morning, Scott. Mornings. Let's see. Who did I miss? Steve, Omar. What up, Andres? What up? But yeah, Blake, I don't do options. No. WVF, no. In fact, just to address that, I'll address it in the podcast as well. Spotify just has a new comment section where I can comment back to you. WVF, here's the overall so that everybody knows. I started doing this podcast and it's coming out. I'm going to do how much money I made this year on the podcast just to kind of, preface it. It's a little bit over $40,000 that I made this year, and that's all in. So it's not like I'm killing it on this podcast because remember, that's self-employment. So you got to take taxes out of that kind of thing. But it's $40,000. It's really good. This is the first year that I'm actually making decent money. The past years, it was, a little bit over 4 figures or something. But I don't quite remember. But I'll put that video out. I started this because I didn't want, I hated seeing people fleece people. And I don't like that. And I have a system. The system has worked for me. Other people may like that system. They may integrate that system into their system, the 4-hour algorithm, Seeking Alpha Premium, all of those, Alpha Picks, whatever you want. I have my system and I use it. And this is what I do to manage my portfolio and everything. I started this entire, and 40K is 40K. I mean, Patty, believe me, I am shocked at the 40K that I made, but it is what it is. I did this for 3 years without making any money. So 40K is fantastic, but you couldn't make a living doing what I was doing for 3 years. And so when I started this, again, I hated people who flexed and who looked. They were showing things like, let's see, who's that OG? Oh, yeah, YouTube. This is the type of person that I didn't want to become. We're going to OG. And this is who I didn't want to be. Make 50,000 before Christmas. That's who I don't want to be. Okay. And these are the people that really pissed me off. Now she has 328,000 subscribers. I don't, she gets somewhere in the neighborhood of 35 streamed 7 days ago, 35,000 people tuned into her. She does options. I don't know if it's actually legit or not. I will tell you, I think she makes people pay for things that are not, let's just go, let's see. Let's go to the page that she usually has. Let's see. I thought it was, yeah, she had her own webpage where she promoted her team. I don't know. But she's got a ton of subscribers. And I don't want to fleece people. I don't flex. I don't do that stuff. And whatever you want from me, whether you pay or not, I am here. I'm here to help. I am not the only reason that the paid newsletter is a paid newsletter. And the OGs will know this. I effed up. So I completely effed up. A year ago at this point in time, because Brandon, I think, was one of the first subscribers. A year ago, when I was doing the newsletter, I was doing it for free. And then I had enough. I thought I wanted to provide like a little bit more outside the box. And so I was testing out the payment strategy in Substack. And I accidentally turned on the pay. And I just, I don't get it. I mean, I'm honestly, I'm dumb when it comes to this stuff. I turned on the paid option and it said anybody who had, pledged automatically got charged. So the next day I went on the podcast and I said, listen, I did this by accident. If you're listening, you're one of the OGs, you're one of the followers. I want to give you your money back if you want it. I don't know what's going to happen with the paid newsletter, but I did it by accident. And that's the only thing that I've ever charged for is that newsletter. The rest of this stuff, TrendSpider and Seeking Alpha, that's an affiliate deal. You can sign up for it if you want or not, but I'm not restricting anything. The only thing I do is restrict the paid newsletter subscribers. They can, I have a couple of founding members of the paid. If you're a paid member subscriber and you upcharge or upgrade to the founding member, which is $400, you can schedule a Zoom meeting with me. And I do that a couple times a week for paid, founding members. It's a $400 charge, and then you just Venmo me. And the only reason I tell you to Venmo me, it's like an hour, but I usually stay on for 2 or 3 hours if you want me to. And I'm finding it you're finding it helpful. My goal is not to make this podcast a money maker. And the only reason I'm telling people that I made $40,000 in the first half of this year, and it's not the first year. It took me 4 years to get there. The only reason I'm doing that is to try and be as honest as I can with everybody about, that money. If I drop this today, I'm not poor. I'm not making any less money. I make far more money in my trading, far more money. And it's unusual, but I make far more money in that portfolio that I have than I do on here. And I view this as fun. I will stop doing this when I think people don't need my help, which is, hey, hey, there's new people that tune in all the time. But I'm not here to fleece anybody. I'm not here to flex. Kelly OG, good for her if she can get people. I just think that when I went on, I think it was the Better Business Bureau site or something, people had so many complaints. And she puts it out there that she rents $1 million homes. And I don't like people who, flash like that. So I don't know that I've had offers for sponsorships and I feel uncomfortable taking sponsorships. It'll probably come to help pay bills at this point. Patty, no. Patty, I'll tell you kind of, and that's probably more the Fire podcast kind of stuff, but I've had a plan. And this is when I tell you guys to plan and when I tell people to plan, I'm a planner. And so for years I planned. The large majority of my stocks are in my brokerage after tax. And that's what I live on. I don't take money out of so far it's been 4 years since I retired, 4.5. I retired January 2020. I was able, the early years of the podcast, I was able to supplement myself with, I had some severance money. My job paid me some severance. I had negotiated that severance. So I got paid severance. Then because it was COVID, I got unemployment. And then the next year, I was able to supplement my income with the MLS. So it was 2021. I did a bunch of MLS jobs, and I was able to live off of that money. I think I took a couple of payments. That was 2021. 2022. I did more jobs through MLS and I made a little bit of money through the podcast. So I was able to not take money out of my brokerage then. 2023, I was able to make enough money between the podcast and MLS that I was able to do stuff that I live on basically, I think $40,000 a year, $50,000 a year. Then this past year, 2023, I was able to make enough money that I don't need to, I think I did 10 MLS jobs last year or something like that. So, and they pay me about $2,000 a time, but then you got to pay taxes out of that. And, it sounds like a lot, but it turns out to be much less than it actually is. But I do live off of like, $20,000, and then this year making the $40,000, I haven't had to pull money out of my accounts. So it Patty. Long story short, it's kind of just more of a planning situation. Whereas when I retired, I need to pay for these certain things, and I had an idea of where I needed to take the money or where I could get money to pay for it. If I ever, like for instance, when I paid for my Tesla, it was $20,000. Did I have $20,000 sitting there in the bank? Yeah. So, Larry. Thanks, Brandon. We know you're not in for the money, you're for each content. Yeah, and WVF, yeah. I mean, that's where I want to provide the value is really in the free content. I mean, the paid content is great. And it's a way for people who have the means to be able to support me as the creator that puts in time. And I really appreciate, everything that everybody does. And even I do this for the emails that I get that have helped people. And I got a great, I mean, there was a fantastic Instagram conversation that I had last night. And this person tipped me, and honest to God, the tips are fantastic. I really appreciate it. And I will not call out this person because they said they're completely shy and not normal like this. But here's what it is. Good afternoon. I stumbled across your podcast a few weeks ago. I have found most investing boring. I look forward to listening to you every day. Many thanks for all that you do. You've helped me a bunch. So. Oh, yeah, I'm being told for IRS reasons, For IRS reasons, anything you give me through PayPal, Venmo, or Cash App, it's a gift. Until Trump signs in that you don't get taxed on tips, it's a gift, not a tip. Yeah. You know, when I get burned out, there's times when I get burned out on here, and I take some time off. I tell you guys I'm going on a trip, but sometimes I don't go on a trip. And Brandon, I'll start up that Fired podcast again. I think I'll update it with a couple of stuff, a couple of things, because I have been, again, if you're going to pay anybody for a Fire thing, make sure you're just supporting that person because you enjoy their content. Any paid kind of quote unquote financial independence, retire early stuff, it's very simple. Live on less than you make, invest what you make, what you save, and then, just limit your expenses. That's as simple as you can do it. And that's why I stopped doing the Fire podcast, is because the first one was on optimizing your income. Where are you going to get income from when you retire? Because, 4 years, I had a plan. I knew where I was going to get. I didn't know that the Major League Soccer gig was going to come along, but I knew I could get something part-time. I didn't know that the podcast was going to come along, but I knew I could build something if I needed to. I didn't know AI was going to come along. I just listened to My First Millions, and I sent this over. They got a great podcast on how you can make money off of TikTok by just using AI and copying other people's videos. And there's kids making $20,000, $30,000 a month doing this, and it's an hour a day they're spending on it. It's not a huge time suck. Getting it set up is the biggest thing. And I can tell you from this podcast, there are 5 podcasts where I've helped people start. All 5 have stopped because nobody was listening. They weren't making any money. They got down on themselves. I did this for, I looked, I think my first podcasts on Spotify, if you go back and look, they have like 10 listens. They're boring as hell. Boring. Yeah, I cringe when I listen to those things. And I'm like, yeah, Tesla, buy it $230. Yeah, it went up to like $700. Today, that's probably what, $1,000 or something. It made sense to buy. But, there's other stuff that didn't make sense to buy. Like, I lost a ton of money on oil, but I learned about commodities that way. So, but maybe I'll do the Fire podcast again. There's 3 of them. I won't put them in the newsletter or anything like that. But when I do a new one, I'll put it out there. Okay. Rather than ramble on, I'm going to start the recording. If you're new here, I'm here every day at about 8:30. I record a podcast. You get the live version, and then you get the recorded version on Spotify and on YouTube. So there's 2 extra ones out there. If you listen to the live, you don't have to worry about listening to the other one. And yeah, that's it. I'll be live on Spaces today, by the way, at 2 p.m. So, okay. Follow me on Twitter. Okay. Good morning. Oh, sorry. What up? We're doing it 80 style. Wednesday, July 10th. Spotify. If you didn't know, Spotify was working on their comment section for the past couple of days. That's why you couldn't comment. They had sent me an email, and I just ignored it. And then their help desk reached out to me because I submitted a ticket. I guess I'm fairly big on Spotify because they reached right back out. And who can get help on these platforms? But I got help. So I guess I'm a fairly big deal, not to quote Ron Burgundy. But I can reply to the comments now on Spotify. Most likely, just so you know, I will simply reply with that I'll put your request in the podcast. But I can also do short comments if you're out of your mind and, hey, what the hell are you doing kind of thing. If I get my old man style stuff on. But I can chat with everybody. So if you're listening on Spotify, first off, thank you. Second off, you can comment down below if you want me to take a look. I got asked just on YouTube Live, do I only do social requests from paid subscribers? No, I'm not in this for the money. I'm in this to try and help people. So if you need some help, just ask a question down below. Trust me, it is like TrendSpider. TrendSpider, my affiliate, I'm an affiliate of TrendSpider. They have a contact us button in the bottom right-hand corner. You can't ask a dumb question. Trust me, they are so kind. When I was building this algorithm, I didn't really understand a lot about technical trading. I knew about candles. I knew about moving averages. I didn't know what I wanted to build my algorithm on. They helped me tremendously build that strategy. And it was of great, that's part of the reason I'm an affiliate with them. I will always be with TrendSpider. Their customer service is top notch. So that's one of the things that I pride myself on is my customer service for anybody who listens is top notch as well. I'll be on Spaces on Twitter today with Wolf at 2 p.m. I did prepare some stuff, so it's probably stuff you guys have heard before. But if you want to listen and you want me to light up some kids, with some Haktua, hop on Spaces. I'll include the recording. I'll post it afterwards on Twitter as well. I don't like to promote it because it's very audio based. And since I've started doing video, I kind of like the charts and the newsletter and stuff like that. One thing I wanted to point out is that we are seeing a little bit flattening here. At 500, I've said it before, and yesterday probably. At 500, you're going to see some resistance. We got to 500 yesterday in the morning candle. 500 was the high, not 500 and 1 penny, 500. When you get to those handles, psychologically, it provides some algorithms, some traders. It provides a natural resistance level. And your RSI is at 77. Your MACD is extended. This may be a sideways move. This may be a down move. Again, we're heading into earnings season. So I don't know what the Qs are going to do, but the Bollinger Bands are cinching up. When we cinched up before at 480, it just shot up. So I don't know if we're going to get a cinch up. I don't know if, the Fed's going to say something. Jerome Powell was speaking yesterday and kind of let the cat out of the bag that they probably will have to cut because staying higher for longer could hurt the economy. So, and he realizes that. So I don't exactly know what's going to happen, but keep an eye on it. I did want to point out in Seeking Alpha, you get this email every morning. If you import your portfolio, and I have the core portfolio, the 35 names, 36. I think there's a little bit more in this because I do track a little bit more since it's not public, but I track a little bit more. I wanted to point out what was interesting to me. My portfolio has a 3.68, which is pretty good, but 27 of these stocks are holds. Now, I won't go over exactly which ones are holds. If you want to see the core portfolio, if you are a TrendSpider subscriber, you get access to that watch list. If you are not, then go over to Savvy Trader or go to my Linktree. The Linktree is the easiest way to do it. It's down here. It says Savvy Trader. You can follow my trades. It takes you right here to the core portfolio. Now, 27 of these 35 names are a hold. That's my point. Is that the quant rating in Seeking Alpha is saying, hey, maybe it's time to just hold. And so patience is what you want in a situation like this. You don't want to go out and go balls deep into something that's at all-time highs. You may want to add because long-term, I don't think it's a problem to add. But you may want to just cause some caution. Some caution. That's it. I said it yesterday. The consumer was weak and that any company that missed and guided lower would be killed. Well, what was one that got killed yesterday? HELE. This is Helen of Troy Limited, okay? This isn't a company that I would ever invest in. This isn't a company that I even knew existed. But if you're a kid like me, Vicks VapoRub, that's who this is. They have hundreds of consumer staple brands within Helen of Troy Limited. And it's a consumer company. What happened yesterday was they missed on revenues and they missed on EPS. They said the consumer is incredibly weak. This is a consumer staples company. This is a problem. It was down 20% yesterday. So when I said, hey, the consumer seems stretched, and this is not a high-end consumer brand. This is a low-end consumer brand. And I think that wealth gap, there's a wealth gap there where if you're a part of the upper middle class to wealthy, you're not feeling this economy. But if you're part of the middle class or lower, you're feeling this economy. So I'm kind of in tune with it. I'm a little bit out of touch with it. Again, my apologies for not really stressing about the money per se, but I think you want to be careful. And this kind of shows you between Helen of Troy and the quant saying, hey, 27 stocks, be careful. Doesn't mean that if you've got, $1,000 sitting in the bank and you want to put it into Amazon, doesn't mean you don't put that $1,000 into Amazon for the next 10 to 15 years or even 5 years. Doesn't mean that. It just means be very deliberate in what you're investing in now, because any trade could immediately go south on you with any bad news in this economy. So again, Helen of Troy down 27%. And what should you do at times like this? I said it before, and it was, of importance last week and the week before when I said it. Have your list of 5 names. If the market pulls back, you should have a list of 5 names that you would immediately buy into. I have my list of 5 names. I am not putting them out there. I have my top 5 portfolio names that I don't get rid of. I absolutely just add to, Apple, Amazon, Microsoft. I don't think you'll go wrong. Google. I don't think you'll go wrong with any of those. QQQ. QQQ has access to all of them. NVIDIA. I think NVIDIA is cheaper than it's ever been. We'll go over that one in a little bit. One that I liked, but is a risk, is SOFI. I was listening to the CEO this morning. I really like this guy. I really want to invest in this company. But look at that chart. Do I want to buy a falling knife? No, I've said this before. I think this is a $10 stock. But do I want to go into something that is this week on a chart, and then I go and look at the financials, and the financials are even worse? The profitability on this company. They have an 82% margin, but their net income trailing 12 months is down 7%. So again, this is what I mean by being deliberate, by being intelligent in your buys. Put a time frame on it. I got to ask just, now on YouTube Live about taking money out of my account to actually pay bills and live. No. And the reason was I had a plan for 5 to 10 years. I've been retired for 4 years now. I knew exactly what I was going to do for 4 to 5 years. Didn't work out exactly the way it was. Worked out a little bit better, but I had a plan. So having a plan makes it deliberate. And if you stick to that plan, we'll go over some of the trading quotes that I saw yesterday. But one thing that I wanted to point out to you, Google, I love Google. And this capitalist letters, this is a fantastic newsletter you should subscribe to. Now, Google investment case, not cheap, but exceptional. Shameless propaganda by momentum traders that Google is undervalued. This is pure nonsense, but I still believe Google is a great investment if it pulls back 15%. Here's why. Now, Google is at an all-time high. I think it's at an all-time high. We can go and look at Google. 190. Do you want to buy it? No. You want to be deliberate in when you buy this stock. Is it going to pull back? I don't know. If this is a 5-year investment, do you invest in it? Probably. But, when you take a look at this monthly chart and you look at it, it's continually going up. Is your MACD as high as it's ever been? No. Up here, it was 21 way back in 2021. Ironic, 2021. But when it was down here, right at the oscillator on the monthly, and the stock was at 95, did you feel comfortable buying this one back in February 2023? If not, do not buy it at 190. The point is, if you have this in your portfolio, and this is what hold means, if you have this in your portfolio and you want to add to it, add to it. But hold doesn't mean start a new position. So I thought this Substack was fantastic. Now, Meta, is this a breakout? Is this bounce time? Remember, that old resistance turns into new support. And you can see the resistance right there. We'll blow this up a little bit more. The old resistance turns into new support. Where are you right now? Let's look at the 4-hour algorithm. Again, have a plan around this. If you don't have a position in this, I'd say hold on to it. Don't go and buy it when it's super, super strong. Now the RSI is at 64. Your Bollinger Bands are wide open. You're above that 9-day, so you do have confirmation. If you didn't buy at 475, do not buy at 530. You wait for the earnings. When the earnings blow it out, or if you come down before earnings, that shelf right here at about 500. That's where you want to add to this. You don't want to set yourself up for immediate failure if they come out and say, hey, we just spent $400 billion on NVIDIA chips. And then Meta goes down, but NVIDIA goes up. You don't want that. Now, I don't think this is a bad investment at all. But you just don't want to set yourself up at an all-time high where you're betting that, a year from now, this is going to be higher. I do think you're higher a year from now. But I don't think you set yourself up that way. I think you wait for weakness. Even if that weakness comes at $550 instead of $530, I think that's when you do it. Again, be deliberate in what you're buying. Now this, we talked yesterday about the MACD. What's this one? Let me see. Hold on. Maybe my notes are a little bit off. I didn't click on this one. Abercrombie & Fitch, market leader with a green inside day off support. Ironically, we can go and look at Abercrombie & Fitch. This is coming up in the scans. And this is one that I'm going to bring up on Spaces. This one's been trading sideways on this 4-hour algorithm. It got you in at 179. You're trading at 179. Now, we talked about buying on weakness. Look, did you want to buy here at 190? Well, maybe it made sense to buy at 190. And I would argue that you're going to get back to 190. The MACD, even if you bought here at 172, the MACD was up high. Did you want to buy there? No, you want to buy on weakness. So when these things show you weakness, you want to buy. 179, you wait for it to get some type of confirmation over that 9-day, and you go and you buy it. And then we pull back to 190, but maybe 200. But you don't buy up here, you buy down here, and you want to understand it. Now, if you don't understand some of these factors like MACD and stuff like that, use YouTube. There are tons of free courses out there. This is one, Linda Raschke. Raschke, I think that's how you say her name. I don't know. It's a strategy called the anti-setup. I posted about it yesterday, how that SMB Capital had said she was a master of the MACD, and this is Trading Lab. Now, Trading Lab uses TradingView. You can just look at this and set this strategy up in TrendSpider. You can set it up in TrendSpider. I haven't done it. Will I do it? Maybe. Maybe I'll share it. If you do it, go and share it with the group. Share it, send it to me. I'll send it out to everybody. But again, this is a strategy that made her millions of dollars, not billions. But you can watch this and set it up. So understand what these things do. Now this is just a great list. This is a great list of stocks with implied exposure. Oh, I do want to read this quote before I go on. We do have earnings. And if we go and we look at Earnings Hub this week and we look, the bank earnings are coming up. You do have tomorrow before the bell. You have Pepsi and Delta. And I wrote in the paid newsletter which one I like. And I went over all of these charts and stuff. But I did want to, bank earnings are coming up on Friday. And this is the quote that I wanted to read to you. It's almost impossible to have a bull market without financials participating. It's a sprawling sector with diverse industries, including banking, insurance, capital markets, financial services, and real estate. Within banking alone, we can distinguish between the too big to fail money centers and the old school regional bank lenders. Although it's number 3 in year-to-date performance with a gain of 11%, the financial spider sector, XLF, has been trending sideways to negative since April. So, how do you want to trade that one? Well, again, if you think that we're still in a bull market, this XLF needs to take off. And we talked about it yesterday. We talked about it when it got this cross up here at 41.12. When it got this entry, I said, hey, I think this is the start of the next leg up. Well, where are we right now? We're at 41.64. This was going to be a resistance level. It's still a resistance level until it's not. And I can't tell you that it's not because, look, we spent from May 15th to May 24th, so about 10 days above that before. We spent, about March 28th to April 9th, we spent above there before. So you're going to have to put in quite an extended rally above this 41.74 to actually say, yes, the banking sector's in a bull market. But I would argue that Citibank is your best bet in here. Now, do I know that they're going to do blowout earnings? No. They reported $1.58 last time. Their expected is $1.43. That's lower. The reported last time was $21 billion in revenue. They're expected $20.08 billion. That's lower. So again, with that quote about the financials, I wanted to put that one in there. This is a great list of AI exposure that's over-implied, equal, under-implied, just based on the price points. Now, what's the consensus estimate is greater than market expectations? Meta, AMD, Pinterest, Snap, blah, blah, blah. What's the consensus equal market weight? Google, Amazon, London Stock Exchange Group, Marvel. What's the consensus in less than market expectations? Microsoft, NVIDIA, Tesla, Taiwan Semi. So take a look at this article. It's a good one. Again, use the tools that you have. Let's talk about chips. Venture capital firm A16Z stashing GPUs, including NVIDIA's, to win AI deals. What are they doing? They're trying to basically buy up NVIDIA chips so that when an AI startup says, hey, we need some money, this is where they'll go, because you know what? We have NVIDIA chips that we can give you. Instead of giving you money, we're going to give you NVIDIA chips so you can run your own large language model at your location. There you go. And this is not good for NVIDIA. This could hurt NVIDIA, because this could mean that the last H100s that they sold, that they're hoarding them, and that people are hoarding them, and that we have an overabundance on NVIDIA. Now, do I think that's the case? I don't think so. But watch your NVIDIA. I do think that 133, where it's trading right now, is a perfectly fine price. Oracle dips on potential server deal with XAI falls apart. Elon said we're going to do it ourselves because we can respond faster. I mean, that's as easy as I can say it. The cloud may be doing this AI stuff as a backbone, not necessarily as the front bone. I like that term, front bone. But again, Elon thinks that they can do it. It's an interesting. They will build their own center. Huge for NVIDIA, because again, NVIDIA chips. That, you know, Oracle's not the only one buying the chips. It's gonna be the meta players, the mega caps. It's gonna be XAI. It's gonna be Meta. It's going to be Amazon. It's gonna be Microsoft. It's gonna be those guys that have the cloud business. It's gonna be everybody. Amazon released a new chip. Big deal. The biggest deal on Amazon, and I've said this for the last 3 days, and Jeff Bezos said he's selling more yesterday, okay? Bezos sold $863 million yesterday, and again, not a single share below 200. That's the lowest price he's willing to do. So how do you want to play this? Again, you're trading at $199.99. The second it goes over 200, Bezos sells hundreds of millions of shares. And so that's going to be a cap. When you get to the time where Bezos isn't selling, that's going to be the time when it takes off. Do not wait. Is it coming back down to 188? I don't know. But that is your support level right now. Okay? You're building this shelf up here at between 198 and 200. Add to it. This is a great chance to get in for a long-term buy. Do I think it's going to come down? I don't know. But I'm adding to this position. I sold at 176. It's now at 200. I'm going to add more here. And I can't. I'm not guiding you in that you absolutely should do this. It depends on your time frame. It depends on your financial situation. I'm simply saying this is what I'm going to do. Do I know that it's the right strategy? I don't know. Every strategy that I take, including every 4-hour strategy that I take, it's a risk. You have to make a risk in the market. Now, I think this is a calculated risk. I think it sucks that he's selling this much. He's not even close to done. He's selling $5 billion's worth. He's only sold about $2 billion's worth. So he's only halfway through. This could be an extended period here at 200. And you have earnings July 29th. Maybe they make mention of it. Maybe they don't. But again, Amazon, in my mind, is a buy. Apple ticks up as Needham boosts price target on the back of a $110 billion buyback. We've gone over this before. The reality, $110 billion is nothing to a $3 trillion company. That's like you cutting your grocery bill by $5 a week. That's essentially what they're doing, $5 to $10 a week. It means nothing, but the price target was raised from 220 to 260. Do you want to buy here? In my mind, I think it's too strong. We talked about patience. We talked about buying on weakness. I don't care if the weakness comes at 250. I don't think adding at 230 is smart right now. The RSI is at 76. You're completely oversold. If we have any kind of pullback on this one, you're pulling back to about 220. 220 becomes your resist. It went right through 220. 220 right now is your support. So if you're comfortable buying at 230 and not at 220, buy at 230. But again, I think you'll have the opportunity to buy at that 220 at some point in time. This one, it's not a weak stock by any means. This is an industry leader. I am talking you to recording on an iMac with an iPad Pro, with an Apple Watch, with an iPhone, with AirPods Pros sitting in my the other thing, with Apple TVs all around this house. I've got Apple stuff all around. They make money off me left and right. But yeah, I just don't, again, patience. This valuation is nuts. The growth, I would rather have you buy this at 250 after earnings when they say we saw a revenue growth than see you buy at 230 and it come back down to 200. So again, you just have to make sure if you have this stock and you own this stock, say you were smart enough to buy in the 4-hour algorithm at 169. Say even you were smart enough to buy here at 185. And you know, I said, hey, there's a little bit of problem. You don't have confirmation, but you just said, you know what, YOLO. You Leroy Jenkins this motherfucker. You went in and went Leroy Jenkins. And for those of you that don't know Leroy Jenkins, just look it up. It's a great Warcraft or something. I don't know, video game. Leroy. But yeah, you Leroy Jenkins this at 185. Are you upset? No. That's the way you will be if you buy it at 230. But do you want to start a position here? I'd say no. You know, again, I think you want to wait for some of these fundamentals on the earnings to come around. The growth is where you're going to get screwed. I mean, the growth, if they don't have revenue growth year over year and they don't change this and they don't up the guidance, again, everybody's banking on the iPhone upgrade cycle. That's what they're banking on. But again, we point to patience in this market. Now, Tesla, it might be time to trim. Look at this. Over 56 bars, 2 months. This is a daily chart from TrendSpider. Daily, 56 bars over 2 months. You were up 96%. Boy, 56 bars, you're up 104% to 288. Maybe that's a little, hey, we might get to 280 and you might want to trim this. I would argue if you bought this at 160 or something back here, I think it was 160 was the low on the algorithm. I said 139, that 140 provided you some support. And then you got a gap up and then you had this sideways move that I didn't trust. And then once you trusted it, at 200, I said there was resistance. I have been resisting this the entire way. I said that this 263 is going to provide you some resistance. It is. But if we get to 288, that's the time when you want to pull back. Now, am I selling this? No. Am I going to trim this? No. I am going to trim it if we get back to about 250. And then I'll start selling in my parents' account. I own Tesla through XLY. My parents own a bunch. This guy, Bill Gross, argues Tesla is a meme stock. It's acting like a meme stock. And he brings up Zap, which was up again. I mean, God, what's Zap up now? Let's see. Zap is up 181% today. 181% today. It's up at 1147. Again, if you listen and you trade, we talked about Zap, ZAPP, and I'll bring this up again. I'm not putting this in the newsletter. This is too dangerous of a stock to put in there. The 4-hour algorithm had us in, let's see, 4-hour algorithm had us in $1.66 way back here. You're at 11. That's 1,000%. But you had to ride your whole way down. I would say that is not a good strategy to trade a stock like this. Let's go into the 5-minute and let's see what the 5-minute tells us. Well, the 5-minute algorithm uses after hours as well. And it's gotten you in 11.90.